Data from S&P Global Ratings projects the economic fallout for the Asia-Pacific region alone could be as much as $211 billion. Let's bring in Fmr Rudd, president of the Asia Society Policy Institute, former Prime Minister of Australia. Welcome back. Good to see you. So how do you tally up the economic damage? What are your expectations for global economy?
Well, it's kind of like concentric circles, isn't it? We start in Wuhan, we go to the rest of China, we go to Near East Asia. And there's a time lag factor. The impact on the Chinese economy in January, February will be nothing short of, I think, catastrophic in terms of real growth. I wouldn't be surprised if the first quarter numbers are in fact in negative territory. But the truth is they're already on the partial recovery curve. The lag factor lies with surrounding economies, and the biggest lag factor actually will lie here. And so I think we're going to have these staged economic reactions like we've had a staged transmission of the virus, one proceeding from the other. Overall hit on the global economy, you've seen the projections as much as I have. I'd be surprised if the Chinese get out of 2020 calendar year in the absence of a real growth rate of around 3 or 4, which means you're looking at stimulus of 2% plus, which is what I think the government's working on in Beijing.
Clearly, China may well, we hope, already be on the recovery path. But a generation of Chinese people have never encountered a contraction of GDP for a quarter. What could be the effect of that? Could it shake the economy into a more lasting recession, or do you think this will definitely be a very quick bounce back?
I think it's going to be a very uneven bounce back. They're not going to do a replication of what they did in 08-09 because that created a property bubble afterwards. You are going to see, I think, a whole bunch of measures to take the tax and regulatory burden off firms, including smaller firms where the hit has been huge. And then I think you'll see a third aspect of the stimulus, not on, as it were, the supply side, but on the demand side, which will be through a large injection of further infrastructure investment, but in the new infrastructure projects, not the old ones we've seen in the past. Overall pattern, though, I think will be quite uneven. The psychology of the country, which is, I think, the essence of your question, has been hit by this because SMEs in China have basically known this sort of movement over about 20 years now. And short of the financial crisis, they've not seen that. It's a big hit.
The G7 huddled earlier this week, came out and said, you know, we'll use all available tools. It was relatively generic, but kind of a statement of support. Did they do what was necessary and needed or possible at the time just by that gesture, or is there something else should be done?
Well, I was Prime Minister during the financial crisis, and so markets are critical, but markets forming an assessment about, let's call it, the floor which governments are prepared to construct underneath them is equally critical. What are the two floors here? One's on public health, hence why the President of the United States is at Atlanta at the moment looking at the CDC. And the second is on a preparedness to act in terms of fiscal monetary policy stimulus. I don't think the G7 meeting so far is sufficient for that. What I would strongly recommend is that they convene immediately a virtual G20 Finance and Health Ministers meeting so that markets conclude that there is a common strategy across these countries rather than every man for himself, which I fear is currently the view.
Yeah, we haven't seen much in the way of leadership huddling together. You know, Kevin, you said as a leader how you pay attention to the markets. The line that we keep getting from this administration is buy the dip in stocks, essentially. Here's Larry Kudlow earlier on Squawk on the Street.
I think when you have these corrections in the market, I don't know what we're down. The latest quote is got down to 13%. A correction from the peak. I'm not sure where it is exactly now. Yes, I would say, as I will repeat my view, Carl, long-term investors should think seriously about buying these dips. That is my view.
Did you ever, as Prime Minister in the financial crisis, tell people to buy stocks? Is that
well, I think
prudent
that's
strategy?
How would we put this in polite diplomatic language? That is odd for a senior economic official or financial official to do. We would never do that. Markets actually make their own decisions. Our job in the public policy space is to provide certainty, in this case on public health responses, where there have been question marks in this country about adequacy, testing kits, etc. And then certainty in terms of, let's call it all the tools on the fiscal and monetary toolbox to act if we end up with a growth gap of 1, 2 or 4%. Telling people to buy doesn't strike me as the proper responsibility. for a public official.
Kevin, wanted to ask you as well about what we've seen in oil and gas. Clearly, Australia, a big part of their economy, exporting LNG. What do you make of the sell-off we've seen and the prices where we are, 41 on WTI, so still some way to go from 2016 lows, and how badly it could hit countries like Australia?
I think there'll be a significant hit. As we know, China represents such a huge slab of global demand, LNG in particular, not to mention coal and other fossil fuels. And you've seen the Chinese invoke force majeure in terms of a number of contracts. And so when markets look at that, they begin to press the panic button, hence why I think their equities are down. But I would say, as I observe these trends, 2 weeks ago we had irrational market exuberance in this place. Today we have irrational market panic. Data lies, in my view, mixed data lies up the middle of that, including in the energy sector, which will recover as the Chinese stimulus kicks in the second half of the year.